Jean-Claude Trichet, President of the European Central Bank, the ECB has received some praise for its handling of the financial crisis. Are we now, in your opinion, through the worst of it, or are there still some unpleasant surprises lying ahead?
I think we are out of the period of the free fall of the real economy, which has lasted 2 quarters until the end of the first quarter of this year. Then we have had still negative figures, but some kind of stabilization. And now the real economy is back to growth again, but we don't declare victory. It is a bumpy road ahead. We have the sentiment that growth remains modest, and we have to remain alert. But of course, we could avoid this drama, which would have been a depression. And had we not stepped in, I'm not speaking only of the ECB, but all the central banks all over the world, and had the government not also been very helpful in terms of taking risks to support the financial sector, we would have had a depression.
Because Dominique Strauss-Kahn at the IMF has said that, in his opinion, 50% or more of the assets held by European banks could turn out to be toxic. I mean, do you feel he's being unduly pessimistic there? And what would it mean if he's right?
No, I must confess that I didn't see that he said that 50%. No, this is a figure that I would not echo, certainly not. No, we see that there are a number of impaired assets that are still here and there in the balance sheet. But it is not what I would call the main issue. The main issue remains that the banks have to cope with the fallout of the recession. And there are a number of write-offs and provisioning for write-offs because of the recession, which are ahead of us. So we call on the commercial banks to do all what they can to improve the quality of their balance sheets, to issue stocks and shares because the market is back on its feet again and can respond yes to such issuance. We call upon them to put aside their profits and not to embark into large dividend over that period, because they need to have, again, a balance sheet that would be as solid, as resilient as possible. And of course, we call upon them also to be very careful in terms of remunerations, packages, bonuses, and so forth, with the same idea. Not only a moral idea, but also the fact that they have to be solid.
There are some economists who are slightly concerned about the fact that some banks have grown since the crisis. Since the beginning of 2007, BNP Paribas has increased its balance sheet by 59% to 2.29 trillion euros, which is 117% of the GDP of France. Isn't that just a little bit worrying to have? Barclays is 108% of the GDP of the UK, for instance.
I think that, again, we have to look at these banks that are big and that are interconnected from the standpoint of their systemic influence. And that calls for those banks that are deemed big and interconnected to have prudentials that would be commensurate to the risk they represent. That's something which is extremely important. We have also to look very, very carefully to, in case they have a big problem and that then bankruptcy or a drama is unavoidable, we have to take care of the fact that it can be unfolded in the best fashion possible. The living wills, the appropriate legal and regulatory environment, particularly for cross-border institutions, is of the essence. And I think that from that standpoint, we have also, of course, to reinforce the full body of the system, because the very same institution can have a systemic influence in a fragile environment, but the very same institution with the same problem can be without any systemic influence if the environment is solid, if the system itself is solid. And it is what we try to do.
Now, we always invite questions by internet from viewers, and one has come in from Frankfurt. In fact, how does the Lisbon Treaty affect the way in which you operate?
I think the Lisbon Treaty has no, I would say, influence on the way the ECB is operating. We were independent, we are independent, we will be independent. We have primary mandate, which is deliver price stability. It is the same. There is no change. We become, from a pure legal standpoint, an institution of Europe, which was not the case before. And so that is a slight legal change, but which I have to say has no practical consequences as regards our function, the way we are dealing with our function. It changes a lot, I have to say, the other institution. It changes a lot the effectiveness and efficiency of the Parliament, of the Council, and of the Commission. And in that respect, I think it's good. And I told the Parliament that I was very happy that we had now the Lisbon Treaty.
We've had another question, one in from France. Can the member states meet the deadlines for reducing their deficits to 3% of GDP by 2012, or in some cases 2014-15, especially given Eastern Europe's reliance on foreign currency loans, which is stretching their governments but also their citizens?
Well, as regards the French case, but also the German case, the deadline is 2013. It is also the case for Spain. In some other cases, the deadline for going back below the 3% or at the level of the 3% is 2012. It is the case, for instance, for Italy or for Belgium. So I have to say that it is extremely important that the government concerned and the Parliament concerned, of course, these responsibilities are parliamentary responsibility, meet the deadline. The credibility not only of the European framework, the credibility, I would say, of the euro area, the credibility of the European Union as a whole, because it's a matter which has been decided by the ECOFIN, is at stake, and the credibility of each particular nation concerned. So it is extremely important that these deadlines are respected.
Now, you were meeting the European Parliament's Economic and Monetary Affairs Committee today. I know there were two key things on the agenda. The exit strategy. Now, you've already announced the ending of your 12-month liquidity lending facility, the imminent end of the 6-month facility, and the 3-month one's going to change in April and get rather stricter. And at the same time, we were talking about systemic risk with the new Systemic Risk Board and so on. Do you feel that you are making progress towards being able to withdraw support yourself and other central banks?
I think, yes. I think that all central banks, and particularly I have to say when I compare the United States Fed and ourselves, we see that we are progressively unwinding the non-conventional measures that have been taken when we were at the heat of the crisis, immediately after the collapse of Lehman Brothers, where we had really a formidable intensification of the crisis. So we said ourselves from the very beginning that the design of our non-conventional measures was precisely done in a way to permit the easy exit when time comes. And time is coming progressively. That's the reason why I have said that we were in a mode of timely and gradual exit. It is what we are doing, as you see, because we have mentioned a number of decisions. Not on all. We have also said that we would continue to be with a full allotment fixed rate mode for the main refinancing operations, for the 1-month operation, for the 3-month operation in the first quarter of next year. And we will see what we do. We said until at least the end of the first quarter and as long as needed. It is a way to capture this idea that we are accompanying the improvement of the functioning of the market.
Now, on the business of systemic risk, though, we have the new Systemic Risk Board, the European Systemic Risk Board. There are those who argue that in some ways it was regulation that helped to exacerbate the problem, particularly the recourse rule introduced by the Fed and Basel II, which effectively copied it and removed the ability to maneuver of the financial institutions. I mean, do you feel there is an element of truth in that?
No, I don't think so, frankly speaking. At least mentioning Basel II is not appropriate because Basel II was not applied at all in the United States of America.
So it was very similar to the recourse rule that the Fed had introduced in America, wasn't it?
Well, I wouldn't say that, obviously. I mean, in the United States, you still had very much Basel I. And it's true that Basel II was influenced as a concept by the way the New York authorities were looking at it, but the fact is that it was not applied. So you cannot say that Basel II has any responsibility, it seems to me, in what has happened. What is true, of course, is that what has happened is giving us a lot of information, and that we have to draw all the lessons from these dramatic events. And of course, then we have to improve Basel II considerably, and it is what we are doing in the Basel Committee, in the governance of the Basel Committee, through the Financial Stability Board, and at the level of the, I would say, global international community as a whole. And that is very important. We are working on it with all the friends of the industrialized world and of the emerging world.
Now, you said earlier on that you'd like to see the market, you're warning them against complacency because things are improving. You want to see them not putting the money into huge dividends for shareholders, or bonuses indeed for their investment staff, but to build capital and reserves, and also to expand the loan facilities to others. I mean, if you had a couple of minutes just to try to persuade the boards of directors of the high street banks and the investment banks that that is essential, how would you do it?
Well, I would say that we have been put in a situation which has been extremely difficult. The whole body of the system was about to collapse. And we would have observed a depression of first magnitude, but the full body of the financial sphere would have been dramatically touched. So they have to consider that. They have to consider that we were ourselves extremely bold and took enormously bold decisions very rapidly to prevent the collapse of the system. We were accompanied by governments that have taken enormously bold responsibilities too in order to avoid that. They have to be fully aware of that and do their job. And all what we did was done to permit the banks to function and lend to the real economy. That is the reason why we did all that. If they forget that, it seems to me that they will miss something which is very important for the society as a whole. And we are very, very strongly calling them, and I'm sure that they will understand that they have to do their job.
Jean-Claude Trichet, thank you very much indeed.
Thank you, sir.